People, I welcome you back to Caroline's Online Academy. In the series of videos, we're learning the various concepts involved in accounting for share capital. And currently, we are doing forfeiture related problems. In the previous video, we understood how we are supposed to forfeit the shares and which accounts have to be credited or debited when we are forfeiting the shares, and how to calculate the amount that has to be debited or credited to different accounts. And in this video, we're going to be learning how to forfeit shares which were originally issued at premium. We got to understand if that's actually going to change the procedure for forfeiture or not. And in order to help you understand that, I have something for you. Yes. So if you look at the Companies Act 2013, Companies Act 2013, section number 52. Section number 52 talks about securities premium and the purposes for which securities premium can be utilized. This has already been explained by me when I taught you taught you shares issued at premium. I had already taught this to you. But in any case, we'll quickly go ahead and read this. Notwithstanding anything contained in the subsection 1, the securities premium account may be applied by the company towards the issue of unissued shares of the company to the members of the company as fully paid bonus shares, in writing off preliminary expenses of the company, in writing off expenses or the commission paid or discount allowed on any issue of shares or debentures of the company, in providing for the premium payable on redemption of any redeemable preference share or any debentures of the company, or for the purpose of its own shares or other securities under section 68. All right, my dear children. So securities premium can be utilized only for this. Now, why did I have to tell you this? You see, in the previous problems and all, when we forfeited shares, whatever amount of money was credited to share capital account, we debited it back because it is not capital anymore as the shareholder ceased to exist, and any amount received from the shareholder or any amount credited in the name of that particular shareholder whose shares have been forfeited to the share capital account has to be debited back to the share capital account because it should not remain in share capital. Now, we would also, whenever we forfeit shares, and if the shares had originally been issued at premium, we would have also made the premium amount due. Am I right or not, my dear children? When we make the premium amount due, we would have credited securities premium. Now, if the shareholder, if we're forfeiting those shares, are we supposed to debit securities premium and then credit share forfeiture or calls in arrears as the case may be? That is the question that we have. And the answer to this question lies in this section. It clearly says that securities premium once received should only be used for the 5 purpose given in the law, section 52. Understood or not, my dear children? So we don't have any rights to debit securities premium once received and credit to the share forfeiture account or transfer to capital reserve account or to call scenarios account. So what are we supposed to do? That is what we're going to be learning. Now, securities premium as such can give rise to 2 situations, my dear children. When you forfeit the shares, originally issued at premium, it can give, when you're forfeiting, it can give rise to 2 situations. One situation wherein the securities premium amount has been received by the company. So let's look at both of them. Forfeiture of shares issued at premium. Premium received, premium not yet received. Let me explain this, my dear children. Assume in a company 2 shareholders A and B are there, and along with application, allotment, and first call and second call, rupees 25, 30 plus 10, 30, 15, 25, 30 plus 10, 30, 15 is collectible. This 10 being the premium amount. The shares have been issued, shares of rupees 100 have been issued at a premium of 10%. So the issue price is 110. It is collectible as given here in the question. Assume A did not pay the allotment money. So what happens, my dear children? A would have paid application money. He did not pay allotment money, first call and second call. And assume B did not pay the first call money, which means he would have paid application and allotment. He would not pay the first call and second call. Now, in the case of A, he has not paid the premium. So A would fall under this category. Premium not received category when we are forfeiting the shares. And when it comes to B, B has paid application allotment. So he has paid the premium of 10 rupees. So he will fall under this category. Understood or not, my dear children? So now we have understood what premium received and premium not received actually means. I got to teach you now how to account or what journal entry to pass in both the cases. Once premium has been received, you cannot touch it anymore, my dear children. That money belongs to the company and it can be only be utilized for the purposes given in the given in section number 52. So ignore that premium was even there in the first place when you're forfeiting. Share capital account will be debited. Share forfeiture account will be credited. Calls in arrears account will be credited. You should forget that the shares were issued at premium itself. If it has been received, then it has been received and it has been credited to securities premium. It can only be further utilized for the five purpose mentioned in the act. And therefore, when you're forfeiting, you just forget about premium. It will remain in the securities premium account. Share capital account will be debited with the called up value of capital only on the shares forfeited. Share forfeiture account will be credited with the paid up value of capital, and calls and arrears will be credited with the called up but unpaid value of capital and premium. But if premium has been received, then obviously this will not form part of in calls and arrears because it has been received. Understood? Now, if the premium has not been received, like that is the shares calls has been made due, allotment money has been made due, but the shareholder has not paid premium. Then what do? We go to debit securities premium account also. Securities premium account debit, share capital account debit to share forfeiture account to calls in arrears account. Share securities premium account will be debited with the called up but unpaid portion of premium. Called up but unpaid portion of premium. Share capital will be debited with the called up value of capital. Share forfeiture will be credited with the called up and paid up. I'm sorry, not called up. Paid up value of capital. Paid up value of capital. And calls in arrears will be credited with the called up, but I'll write it here. Called up, but unpaid value of capital and premium. Calls in arrears will be credited with called up, but unpaid value of capital and premium. All right, my dear children, let me go ahead and explain this to you. I hope you got this. You can watch it again in case you want explanation. I mean, you want to understand better. I'll explain this further with the solution, with the example, with an example question. Understood or not, my dear children? I have made a question for you to explain this concept, and that is Padmesh Limited question. Let's look at it now. Padmesh Limited issued 1 lakh shares of 100 each at a premium of 20% payable as follows. On application 25, allotment 30 plus premium of 20, and first call 30, and second call is remaining 15. The company received 1 lakh applications and full allotment was made. Akash holding 1000 shares did not pay allotment money and his shares were forfeited. Pass necessary journal entries for forfeiture. See, Akash holding 1000 shares did not pay allotment money and premium was collectible along with allotment. So he didn't pay premium. Understood or not, my dear children? So let's go ahead and do this. Whenever premium is involved, the question that you need to ask yourself is, has premium been received by the company from the defaulting shareholder or not? In this case, the defaulting shareholder is Akash. He didn't pay allotment money. So hence he would not have paid the premium payable along with allotment money. So premium has not been received. When premium has not been received, securities premium account will be debited. And after that, the remaining accounts that have to be debited or credited during forfeiture will be done. The share capital account will be debited. Share forfeiture account will be credited. Calls in arrears account will be credited. Akash's shares forfeited. Now let's look at how to calculate the numbers. You see, securities premium account will be debited with the called up but unpaid portion of premium. The premium called up here is along with allotment, which is 20 rupees. And Akash did not pay the allotment money, and therefore he didn't pay 20 rupees. Am I right or not, my dear children? So on the 1,000 shares of Akash, the 20 rupees unpaid portion of premium will be debited. And share capital will be debited with the called up value of capital, and you know that it is 100. As the question does not mention when the shares were forfeited, and if the question does not mention when the shares are forfeited, we've got to assume that the shares were forfeited after all the calls were made. And if all the calls have been made, then the entire 100 rupees, the face value of the share, would have been made due. Actually, they would have made 120 rupees due, including the premium. But the 20 rupees premium that's been debited to securities premium account, the capital portion made due would be 100, and therefore that 100. So that is 1 lakh. Share forfeiture will be credited with the paid up value of share into number of shares forfeited. Paid up value is what, my dear children? Akash has not paid allotment money, so he would only paid application money. So that is 25 into 1,000, which is 25,000 rupees. And calls and arrears will be credited with the unpaid portion of capital and premium. Called up but unpaid portion of capital and premium multiplied by the number of shares forfeited. The total issue price of the share is 120, my dear children. Out of that, our friend has only paid application money of 25. So remaining 95 he hasn't paid. You can also find this number from the calls that he has not paid. He has not paid 50 rupees in allotment, 30 rupees in first call, and 15 rupees in second call, and that adds up to 95. So the amount will be 95 multiplied by 1,000, which is 95,000. With that, we have come to the end of this video, my dear children. I hope you've understood how to account for a share, forfeiture of shares which are originally issued at premium. And the only thing that you have to ask yourself if premium has been received or not. So you might want to practice a problem in which there are different shareholders, some of whom have paid premium, some has not paid premium, some has paid some part of the premium, but other hasn't paid the other part of the premium. Just like the ones that I'm showing you right now. And that we'll be doing in the next video. I'll be solving the next video. We'll solving the problem that I'm showing here in the next video, in which I'll teach you how to account for forfeiture of shares when certain part of premium has been paid and no premium has been paid, and then the entire premium has been paid. Understood or not? So I'll see you in the next video. Please do like, share, comment, and subscribe to this channel. And that will actually motivate me to do more for you, and it'll help the YouTube algorithm. I mean, the YouTube algorithm works in such a manner that and more people like, share, and subscribe. The video gets pushed and it reaches more and more people, so it'll benefit a lot of other students who are still preparing for their exams, and more importantly, it will benefit me. And I really like it when it benefits me, and therefore I kindly request you to share, subscribe, and leave a comment. I hope you all have a great time. You people have fun. See you again with another video. Bye bye.